Hello everyone, my name is Anna and we're Danish Accounting. Today we are diving into the transfer pricing rules in Denmark. These rules are crucial for multinational companies and those involved in cross-border transactions. We will explore the most important topics of the Danish transfer pricing rules, how they might affect your business and what steps you can take to ensure compliance. So whether you're a business owner, a financial professional, or just keen on international business regulations, stay tuned as we unpack the essentials of Denmark's transfer pricing landscape. Transfer pricing regulates the price for controlled transactions between a buyer and a seller controlled by the same owner or physical person. Transfer pricing rules in Denmark have changed many times over the last couple of years. It is now mandatory for larger companies in Denmark to submit transfer pricing documentations each year when certain thresholds are exceeded. Note the difference between being required to prepare the transfer pricing documentations and being required to submit the transfer pricing documentation. It has been required to prepare the transfer pricing documentations for many years, but it was only to be submitted within 60 days upon request from the Danish Tax Agency. Transfer pricing documentation should now always be submitted 60 days after the corporate income tax return deadline when exceeding certain thresholds. Also, it is worth noticing that it is no longer required to prepare transfer pricing documentation for controlled transactions between two Danish companies or between a majority shareholder, which is a tax residence of Denmark, and a controlled Danish company. Why is transfer pricing documentation relevant? When discussing transfer pricing rules in Denmark, it is important to understand why the rules were put into place. Traditionally, companies have used intercompany pricing to reduce the tax burden. Companies would often charge a higher price to other controlled companies in high-tax countries, which reduce the profit in the high-tax country, while charging a lower price for controlled companies in low-tax countries, which increase the profit in the low-taxed country. The Danish Tax Agency has dramatically increased transfer pricing requirements for controlled transactions to combat this. So, what is transfer pricing? Transfer pricing rules in Denmark follow a set of OECD guidelines which helps to determine the price a company should charge other controlled company or a majority shareholder for a product, service, loans, or similar. A company is controlled when another company or physical person owns more than 50% of the shares in the company. For example, a transaction between a parent company and an operation company is controlled, and a transaction between a majority shareholders and his or her company is also controlled. Transfer pricing is based on what price an uncontrolled transaction would be valued at. Who should prepare transfer pricing documentation in Denmark? All Danish companies who are tax residents of Denmark that have controlled transactions with a foreign company or majority shareholder who is not a tax resident of Denmark should prepare transfer pricing documentation for the controlled transactions. Also, a majority shareholder who is a physical person and a tax resident of Denmark that has controlled transactions with a foreign company who is not a tax resident of Denmark should prepare transfer pricing documentation for the controlled transactions. Even though it is required to prepare transfer pricing documentation, it doesn't always need to be submitted to the Danish Tax Agency. In the past, it was also required to prepare transfer pricing documentation for controlled transactions between two Danish companies, but this rule has been cancelled since 2021. Who should submit transfer pricing documentation each year to the Danish Tax Agency? There are two thresholds to observe which will trigger the transfer pricing submission requirement when having transaction between two controlled companies or the majority shareholder and the controlled company. The first threshold stipulates that the controlled companies should have 250 employees or more, and if a group of controlled companies have a balance sum of 125 million Danish krone or more, or a revenue of 250 million Danish krone or more. If these thresholds are exceeded, the controlled companies and the majority shareholder, which are tax residents of Denmark and who have had controlled transactions, must submit transfer pricing documentation latest 60 days after the corporate of personal income tax return deadline. These thresholds are global and consolidated for the whole organization. So, not just for the local Danish company. You should include the parent company and all subsidiaries controlled globally when determining if you exceeded the thresholds. If you are below the thresholds, you don't need to submit the transfer pricing documentation, but you still need to prepare the transfer pricing documentation. Upon request from the Danish Tax Agency, you will have 60 days to submit the transfer pricing documentation in this case. Please note that if your company have had controlled transactions with a company in a country that doesn't have a double taxation treaty with Denmark and is outside of European Union, your company must always submit transfer pricing documentation regardless of the above-mentioned thresholds. What should the transfer pricing documentation include? The transfer pricing documentation should contain a master file, which includes information about the whole organization, and a local file, which only provides information about the local entity. Furthermore, it is essential to include an analysis called a benchmark. A benchmark is a mandatory analysis which substantiates that the controlled transactions are carried out following the arm's length principle. Usually, the benchmark is made by comparing the simplest of all entities involved in the controlled transactions with other comparable, non-controlled companies, using an approach called the transactional net margin method, or in short, TNMM, and/or comparable uncontrolled pricing, in short, CUP data. How does a company submit transfer pricing documentation? When a company submits the corporate income tax return, it must declare information regarding controlled transactions in the fiscal year. Depending on your situation, should you be required to submit the transfer pricing documentation, a new transfer pricing menu will appear on the left side of the Danish Tax Agency's website after submitting the corporate income tax return. In this transfer pricing menu, you can upload your master file and local file together with relevant documents. Do you have controlled transactions with entities in countries without a double taxation treaty? If you have controlled transactions with entities in countries without a double taxation treaty with Denmark, which is located outside of the European Union, you always need to submit transfer pricing documentation, even if you are below the thresholds mentioned before. Shall a majority shareholder, which is a physical person, submit transfer pricing documentation? Transfer pricing rules in Denmark is also relevant for majority shareholders. If you are a majority shareholder and a tax resident of Denmark and you have controlled transactions which exceeded the thresholds mentioned before, or with a controlled company located in a country without a double taxation treaty with Denmark, which is outside of the European Union, then you also need to submit transfer pricing documentation for your controlled transactions as a separate local file and a master file. In this case, you must mail the documentation to the Danish Tax Agency, since you cannot upload transfer pricing documentation on Skatborger. Transactions between the majority shareholder, who is a tax resident of Denmark, and a Danish company don't require the majority shareholder to submit transfer pricing documentation. Also, remember that you always need to declare controlled transactions as a majority shareholder on your personal income tax return, regardless of being required to submit the transfer pricing documentation or not. How do the Danish Tax Agency check transfer pricing? In general, the Danish Tax Agency uses a system called Orbis. This system enables the Danish Tax Agency to search in a database with companies in Denmark and abroad. Naturally, checking transfer pricing is a challenging and complex task. But to give you an idea, here is a simplified description of how it is checked. The most common approach is to select comparable companies which are adjusted to match your company as much as possible. Depending on the type of controlled transactions, the Danish Tax Agency will make a report from Orbis that shows how much revenue and profit these companies made in the fiscal year. By dividing their profit by the revenue, you can see how much percent of the revenue ends as profit. The Danish Tax Agency then check if you made the same profit in your company. This is called the Transactional Net Margin Method, or the TNMM method short. TNMM is the preferred method to benchmark transfer pricing when CUP data is unavailable, comparable uncontrolled pricing. This preferred method to benchmark transfer pricing when CUP data is unavailable. Preparing compliant transfer pricing documentation and performing a benchmark analysis is a complex and specialized task, most often prepared by your accountant or auditor. What costs should you expect for transfer pricing documents? Transfer pricing documentation consists of the following documents: a master file and a local file. The work needed for preparing transfer pricing documentation is extensive, so always make sure to allocate sufficient resources and to be in good time. Can the deadline to submit transfer pricing documentation be extended? It is important to note that different rules apply to the master file and the local file when it comes to extension of deadlines for submission. The deadline for submitting a local file can generally only be extended if the deadline for submitting the corporate income tax return is also extended. If you have applied for or received an extended deadline for the corporate income tax return, you need to apply separately to extend the deadline for submission of the local file. Be aware that extending the deadline for the corporate income tax return and the local file rarely is accepted. If the master file is delayed, it is generally possible to submit the master file from the previous year and inform the Danish Tax Agency when the master file for the new year will be submitted, together with an overview of the most important changes since last year. It is also possible to apply for an extension of the deadline to submit the master file for up to 12 months. So, the extension options for the master file are generally more flexible than the local file. International organizations with a consolidated revenue of more than 5.6 billion Danish crowns will need to follow country-by-country reporting requirements following OECD guidelines as well. That wraps up our overview of Denmark's transfer pricing rules. Understanding these regulations is essential for maintaining compliance and optimizing your business strategy in the international landscape. My name is Anna, we are Danish Accounting. Thank you for watching.